My name is Cameron Foose, and I have been a professional day trader for 13 years. Welcome to the Life of a Day Trader podcast with the Foose 4 trading team, Michael Spinoza and Robert Millar. You are going to learn the ins and outs of day trading and hear real stories from professional traders. This is the Life of a Day Trader. All right, what's up, everybody? Cameron Foose here with Foose 4 Trading. We got the whole squad here, Michael Spinoza and Robert Millar. Today, we got an interesting topic because it's a topic that it's definitely something that we need to address because we get DMs every day asking, do we trade this? Do we trade this? Do we trade this? Do we trade Forex, options, whatever. We don't trade any of that. Okay, so today we're going to talk about why we trade small caps and also talk about how important it is to find your niche in the market. Find out what's working for you and roll with that. I was talking about this analogy the other day, something that either Mike said to me or Robert said to me, and it's like somebody coming up to a professional basketball player. It's like, man, you're playing basketball so well. Why aren't you playing hockey as well? It's like, because I'm good at basketball. That's my niche. That's what I excel at. That's where I'm making the most money. I'm not going to waste my time going and trying to play hockey at the same time. Okay, so that's the same kind of thing in day trading and finding your niche strategy. So we kind of want to break down what the other options are. Probably the most common one I would say is Forex that we hear bullshit or fluff about, which is probably, if I look at my DMs today, I probably get like 3 or 4 Forex DMs like, hey, do you trade Forex? Like, I'm interested in Forex.
Same.
Why don't you trade Forex? So I guess we could break down. Forex is trading currencies all over the world, and it trades 24/7, and you can trade it whenever you want. But the problem with Forex is I have been in this game, at least trading, for 14 years now, and I haven't met a single person who actually trades Forex and is making money. The majority of it is all a MLM scam. So if you sign up for Forex or something, or if you get reached out by somebody that's trying to get you on Forex, the likelihood of it being a real Forex trader is pretty low. It's usually going to be some sort of pyramid scheme, MLM, network marketing opportunity for business. And some people are making bank doing that, but you got to understand that's not trading. It's not Forex. They're basically selling tools and trying to get people under their network to make money. So, Mike, what kind of DMs are you getting about Forex on a daily basis?
Basically, just like, it's too good to be true.
Yeah.
Really just, I think I tried to understand maybe why so many people trade, and I guess it's because of people that are overseas, right, internationally, that don't have access to the U.S. markets. But I really have never met in person a lot of people that trade Forex that are successful. Like anyone I meet that trades, it's usually always stocks, at least here in the U.S. I haven't personally met anyone that makes consistent money trading Forex. Not to bash it, but and the DMs are just obnoxious on social media, Yeah,
it's just a constant influx of people wanting to trade Forex because there's so much advertisements and there's a lot of money. There's millions of dollars being backed in the Forex system because there's so many software companies out there that are selling tools that are all part of this MLM system that's going on. And another reason why Forex is so common is because the cost of entry is so low. A lot of these brokers out there, you can start with like $25 or something, $50.
I don't know that. That makes sense then.
And then they're like 50 to 1 leverage with $25 or $50. And so that's where there is a lot of people with Forex interest. But Forex brokers, a lot of it is actually not even available in the US. I think that's why a lot of the people that reach out are always from another country.
Yeah, that too.
Because there's so many Forex brokers. When I was looking at crypto options at one point, for brokers, majority of it, they wouldn't accept US clients because they just do Europe and Forex bullcrap. So for me personally, Forex is not my niche. So if you guys, I hope everybody who follows me watches this so they can never fucking send me a DM about Forex.
Again.
It's tough though. Like if you just Google like simple trading concepts, no matter what it is, you can get led down the rabbit hole of Forex. The marketing is everywhere.
Yeah, that's what I was saying. There's
Hard to
Yeah,
avoid.
it is.
millions and millions of dollars backed behind Forex marketing and advertising. So you see it everywhere, especially Forex is essentially considered in a technical term also crypto, which is another.
I was going to say crypto is just as bad when it was hot in terms
Yeah.
of the social media and the advertisements and like you're a mailman or the guy cutting your haircut asking you about Bitcoin and you're just like, what?
Dude, everybody was talking about Bitcoin. Like I remember just like even being in South Africa, that was earlier in January, I go up into a cafe and the manager comes up to me like, dude, are you Cameron Foose? I'm like, yeah. He's like, oh man, so cool to meet you. And then we sit down and then he's like, oh, I wanted to talk to you about Bitcoin. I'm just like,
Oh no.
and Norbert just gives you the look like, oh God.
Norbert,
He had been with me for like 2 months or something already, and he had seen countless people come up and want to talk to me about Bitcoin already. I'm just like, dude, like, I don't fucking know. Like,
right?
it's a bubble, okay? Anything that goes parabolic in the history of markets
Just like this.
pops. If you see something parabolic like Bitcoin, I don't know where Bitcoin is going to go in the future, but if you see a parabolic move like that, it's going to crash. It's 100% probability. That's why we'll talk about what our niche is and why there is 100% probability of that happening.
That looked like a lot of stock charts too, which is why like we were all pretty good staying away when it was up, up in highs because it looked like the dries, the HMNY, the GVOs. It's nuts.
Yeah, I mean, there was a shitload of money to be made in the crypto market when that ran happened, and I sat on the sidelines. Like, I wish I dabbled. That would have been nice, but at the same time, that's not when I look at it from the standpoint of how do we trade stocks. Is there a risk reward ratio there? If the stock's already gone parabolic, is that something we're looking to technically do? There was a lot of sympathy plays as well. That's where a lot of it's where a lot of people made their money. But my lack of knowledge and my lack of wanting to step outside of my niche, because that's not where I am, avoided that. But obviously there's woulda, shoulda, couldas in the market. When I was looking at Bitcoin at like 5,000 after it just ripped from 1,000, I'm like, all right, I don't want to touch this thing. And then it's at 10, it's like, all right, definitely don't want to touch this thing. And it's at 20,000, I'm like, all right.
That's when everybody did touch it, which is
everybody. That's when everybody was talking about it. That's when everybody was asking me, hey, are you buying Bitcoin when it was at 15 to 20,000? I'm like, fuck no, I'm not buying Bitcoin.
My friend asked me that about it, and he said, me and my friend want to split a coin. I'm like, excuse me? I'm like, that's when
Yeah, we're thinking about going on one coin at 20K.
Which goes to another benefit of small caps, which we'll get into, is price of entry,
Yeah. So those are kind of two of the things that we hear most commonly, guys, is crypto and Forex. Forex, I don't know anybody that makes money actually trading Forex. I know a lot of people who are doing MLM Forex that are driving around in nice cars and saying that they hold up a cell phone with like, I made 50 pips today, which is like $20. I'm like, all right. So it's clearly he's using the harmonic scanner or whatever the fuck it's called. So Forex, my opinion is, if you want to learn how to trade Forex, I don't even know who you would go to learn how to trade, because I don't know anybody.
Same.
That's one thing that I Forex has been around, I think, since the 90s, but it didn't start getting crazy until about 3-4 years ago, and to understand currency, I mean, the banking institutions have entire buildings dedicated to researching it. I mean, are you, Joe Schmo with your computer going to be able to understand economic realities in Asia? No. I mean, and we'll also talk about this in the small cap realm within stocks, where you can have your edge. And I just don't see how you have an edge with Forex when you're like literally it's 24/7, multiple different.
That sounds
currencies.
Like my nightmare. 24/7.
I mean, there was, I remember, I think the Swiss franc literally blew up Forex exchanges because they made some governmental decision overnight that was surprising, and it squeezed up a bunch of people, and literally total exchanges, like these small ones like in Germany or whatever, gone. gone overnight. Yeah. Just totally, your money's gone. So, how do you educate yourself on a level like of a large banking institution?
Yeah, you're trading against them, right? It's like, why would you want to? You're supposed to small caps again. None of these.
Another thing that is so fucking scammy about Forex is Forex signals.
Yeah.
Get the Forex signals. If you're looking at
automated trading.
Automated trading, signals, whatever. Like if you're even trying to follow us for alerts or anybody that's trading for alerts, it's all bullshit. There's no such thing as copycatting a trader. You can learn how a trader trades and make the trades for yourself and mimic their strategy, but you can never follow or copycat anybody in trading. Just literally does not work that way. And that's another thing that Forex does in a scammy way is get our Forex signals or get our software that's going to give you the correct signals to make money. Okay. You can't just sell a product that generalizes signals at a mass scale and have it work. That's not how this game is. So just to wrap up Forex, guys, if you want to learn how to do it, I don't know who to go find as a mentor to actually learn how to trade. Just understand that the majority of it is a MLM-based software selling tool and network marketing. It's not actual Forex trading. So you might be able to make money doing network marketing Forex MLM shit, but it's not actual trading. So it's something you definitely need to understand about that industry and what's actually going on. So other options are options. Something that I haven't really ever dabbled in. I know Mike.
Used to dabble.
I dabbled. What was that experience like for you, Mike?
I had some nice, wins, but more losses. So that was always fun. But I mean, I think it was more of a gamble. And there's a way to trade options properly now. I guess, like I see people that trade the weeklies or the monthlies, and the people that trade the weeklies that are looking for like the gamble on the options, like an overnight earnings or something like that. That was always like that never worked. Same way with stocks, but there's a true statistic that 70% of options expire worthless. So already that unless you have a system, the odds are against you.
Yeah, options are definitely a much higher risk depending on the way you trade. I know there's ways to hedge your bet on each side of the trade so you're not risking yourself fully, but you also have to understand when you're trading an option, say you put in $5,000 to an option, you're risking that entire $5,000 to lose. On a stock, if you're buying a stock at $5 and you put in $5,000, that stock has to go to zero, which is not likely going to happen overnight.
Yeah.
To lose that entire $5,000. When you're going into options, you have to understand that you're risking that entire investment in a much more volatile state. There are ways to protect and hedge yourself against that, but it can happen very, very quickly. With options, I'm not an options expert. I don't know really shit about options, but I know the risk involved. So it's not something that I like to do. Again, I maybe know one guy in the industry that makes money in options. I still don't know, really what he does, but I don't know really what's going on in that industry. It's not something that I do, and it's not something that I see commonly. People actually making real money in options. So it's something that I stay away from. And again, if you want to learn how to do it, something that you definitely need to do a lot of research and understand the risks involved in options.
You might not know this, Foos, but when I would say, I started your program and I got pretty good at it. I thought, I got to the point where I was pretty consistent. It was probably about a year and a half of trading with you. And I was like, oh, cool. I'm the man, stocks, I get that, let's move on to options. So I decided, I took some of my profits and I spent $3,000 on this options training course. And, it was actually pretty good, but there is so much involved with the Greeks, the IV, all the different types of trades and understanding how they work. And so I just went into it, and this kind of gets back to the point of having a niche. Don't be ADD about it. You find your niche, you get good at something, like just stick to it. And I'll tell you an example. Essentially, I started out with I took a $5,000 account in options, and I mostly stuck to monthly spreads. puts and calls, and I made 20 grand in about 6-7 months doing that. And I lost all of it within about 5 weeks.
Yeah. I was thinking about options. You can leverage your money so much. You can do like a $10,000 investment on a very high risk option, lose that 10K, but you might make 100 depending on what you're actually trading. So it's a gamble. It's like it's not, you're risking your entire investment to go into a very high risk trade. So
and that's why if you do get it right, there's so many different ways to lose with options. That's why when you do get it right, with your strike or your idea, and everything has so many things have to go right on it to actually win. And when you do, it's pretty awesome. You're talking like a big percent gain, but it's the odds are against you. And that's why when you do win, you make a lot. But over time, it was, you can get good at it. It's nothing. I don't think that's scammy or anything. It was just really intense. And
I look at small caps like liquid options, guys. That's how I look at it now. Yeah. Options. The problem is, like we all said, you can lose all of your money. But the small caps, you can get that same volatility and not lose all of your money, unless you're short your entire account in a stock.
Get caught in an overnight squeeze.
Small caps, you get that volatility, which is the benefit as well.
I went back and never touched it again.
Yeah, I read about a half of a book on options once, and I was like, I don't know what the fuck's going on here. This is really complicated.
I'm
out. But anyways, guys, okay, so those are kind of the different things that we can most commonly trade. There's like futures and stuff. I don't know anything about futures, but so I'm not even gonna go there. But basically Forex, watch out, MLM, options, you're risking everything to make a lot, but you're also, again, risking everything that you have. You can blow your account up extremely quick. Small caps, which is what we trade. So I wanted to start talking about this, guys. Some people call them penny stocks. Some people call them small caps. You can call them whatever you want. I'll basically break down what we actually trade and why. So I consider it small caps. I actually removed, I think in 2016 or 17, I removed the word penny stock from my entire website because it's not technically what we do. I was so sick of people trying to pinhole us as penny stock traders. I don't consider myself a penny stock trader. I'll trade stocks under $1, but that's not what my focus is. I like to trade small cap stocks under 20 million shares of float. That's basically it. Stocks between 1 to 5 to maybe upwards of $10 per share, sometimes upwards of 20. But the most key factors there are stocks with relatively low market cap and usually under 20 million share float. The reason being is because this is where the volatility is in small caps, is what I'm going to call them. And that's basically what our niche is. It's what I like to trade. It's what Mike likes to trade. It's what the entire Foos4 system is all about trading, because there's volatility there and you can make a lot of money without having to risk everything like in options. You're actually trading. You're not doing an MLM scam. This is actually real trading. So I know, Mike, you had just written down the list right before we just did this of what the topics we're going to go over. So why don't you start off with number one?
That's number one, basically, is the public misconception of penny stocks. And, the true definition of a penny stock is a stock under $5, but everyone thinks penny stock is like those stocks that are literally 1 to 2 cents or like they're 0.0015.
Yeah.
And that's why there's really a public misconception that that's there. And, that's the first one. Is good reason you took off penny stocks is because it's really small cap stocks, stocks that are under 2 billion market cap, low float. And there's plenty of liquidity for anyone to trade, a pretty decent dollar amount. It's not, people talk about, can you get in? Can you get out? These stocks trade sometimes 10 to 60 million shares a day. So it's way different from the whole penny stock, looking for the stock that's 0.005 to go to $1. That's like the same people that play the lottery. But these small caps can rip 1,000%. Sometimes, we've seen stocks go from $1 to 20. So that's why we trade them. But everyone should understand that there's a difference between the 1 cent stocks and the 50 cent plus stocks.
Yeah, and that's something. So when I first got started trading in 2005, that's what I was. I was a penny stock trader, as in 0.005 cent stocks. That was
Nice.
like
I didn't know that. That's funny.
that was like my go-to shit. And because I was part of 3stocksonfire.com, that's where I started 2005, and that's kind of what their niche was at the time. They're kind of focused on small caps, but there were so many hot penny stocks per day. I'm going to call penny stocks like something like under 20 cents in this setting that I'm talking about.
Hmm.
And a lot of that was OTC. So the market has completely changed since 2005. That was 14 years ago or whatever when I started. But there was money to be made. It was very difficult to be consistent doing that. And I blew up my account 3 times, 2 of them because I was trying to trade these penny stocks. You could hit a big win. This is almost kind of going back to options. You could be like, all right, I'm going to catch one of these, stocks that go up 500%, and I'm going to buy it at 2 cents. It's going to go to 10 cents, which is a huge move. But that's kind of like swinging for the fence or making a big risk gamble. Trying to do that consistently is not going to happen. So that's not what we do. If you're looking at what we're doing, or if you're asking if we trade penny stocks, we don't trade per se penny stocks. Usually I try to not go under 50 cents per share. One of the patterns that we trade is called the gold pattern. Something that I coined back in 2007 or 8 when I did the first original Forex trading, and that's a stock that has been trading under $1 for 6 months to a couple years, and has a breakout pattern over $1. $1 is a huge significant level. Yeah. When it breaks out over that mark, that's kind of like, okay, this stock is no longer a penny stock per se, and now it's coming back into real stock territory. And a lot of times those would turn into 50 to 300% rippers. And that was kind of my favorite pattern to play. So those aren't even actually around too often anymore.
I remember that pattern. That was the go-to.
Yeah. The last time I traded that pattern, I had 40,000 shares, and then I went to the strip club with Robert.
Oh, man.
I was up 45 grand on it, and then I slept into the open, and I came back and I lost like 5K.
I remember because I wasn't on the team at that point, and I remember being like, "No, where's this guy Fooster? He's definitely."
I'm sure the whole chat room is like,
dude.
Make them up.
Honestly, that was the last gold pattern I ever traded. That's it. It's done. Like,
yeah, it's tough. Most of the time we trade the now Foos, right? It's like we look for that momentum over, and then it's just day trade, I guess.
Yeah,
I did notice that with the gold patterns. They wouldn't, like back in the day, I remember they would break that dollar mark, and that was a real significant punch, and it would just kind of stay there.
Yeah.
And it started to kind of, those gold patterns started to kind of, okay, it would do it, and then everyone would be like, oh, okay, it did it, and then the volume would fall down. And so
what would usually happen, it would go up to like $1 to like $1.10 to $1.25, and there would be a shitload of volatility of selling going up and down, and then it would decide if it was going to continue up or down. So this is also just due to the fact of more and more retail traders coming into the game, being able to come in and actually trade. So the game has definitely been evolving hugely since I started trading in 2005. Today's market is almost ran by fucking chat rooms and other people like creating shit on Twitter or whatever. It's crazy. So, but there's a lot of money to be made in this volatility. Just like Mike was saying, you need to trade options to get that volatility. There's so many retail traders out there that are creating all this volatility in the markets, and all we're doing is taking advantage of lack of knowledge. It's like Mike was saying, it's just an exchange of wealth from people that know what they're doing and not knowing what they're doing. And so that's
a good one.
Yeah, it's just a lack of knowledge and lack of education of one, patterns, and two, most importantly, just psychology, human nature, psychology, understanding when people are buying, when people are getting stuck into positions where they're about to stop out. And that's kind of what we talk about a lot and teach at Forex. So Mike, why don't you talk a little bit about just like your thoughts on the psychology of trading and how it's changed since you started, especially just trading small caps and the change in volatility?
I feel like either it's changed or my look on it has changed due to like what I've experienced, And I said this in a recent interview that these technicals and another reason why we trade small caps is because they're technically friendly with charts. you can look at it and perceive it as an illustration of human behavior, all of these charts, right? Like just look at a chart that goes parabolic and you just see all of the people that are having the FOMO or they want to just play that momentum. And then when you see that, it start to reverse, you think about how many of those people that are going to need to sell eventually. And, you want to get in before they start dumping if you're going to short it. So this is where you start to think about the market from that aspect, as opposed to like just a candle or a price,
Yeah, no, human psychology the entire stock market is run off of human emotion, other than algorithms that are now implemented in a lot of large caps, but a lot of small caps. I don't know how much algo activity is going on in them, if any at all. I don't know, but all of it is driven by human psychology, human emotion of fear and greed when a stock starts going up. Oh shit, I want to buy in. I have FOMO. I want to continue driving this stock up. And then it gets to a point where it's parabolic. Just like every parabolic stock goes up, there's a 100% probability that that stock is going to have a pop or a pullback. And that's what we focus on when we short. And that's why we've been shorting so much the last year or two, because the probability is there. We know for a fact that there is going to be a point in time when this stock pulls back, and then all this boils down to when is the supply and demand over of people having FOMO, and then to the people having fear and panicking,
panic selling.
And that's what you take advantage of on the short side, is taking advantage of people's fear after they get in because they had FOMO and bought at the top, and then they all start panicking like, oh shit, it's not going up anymore, it's starting to crash. And then we try to take advantage of that and go on the short side.
It's also easier to do that, I feel like, Foos, on small caps than large caps, which is another topic that it's easier to read some of these charts on these small caps, I feel like, than these large caps. Like Tesla, you look at a daily chart on that thing, and I have no idea what that thing's going to do,
Yeah, the intraday, especially for me, it just seems a little bit more unpredictable, a little bit more kind of, you can get
correlated with the market also.
Yeah, I'm looking at the daily chart of Tesla right now. I'll pull it up on the screen. I'm just like, there's like nothing going on here that I have fucking any idea.
Where's your edge?
It's just like, okay, what are you going to do with this on a day-to-day basis if you're day trading?
Right.
There's no...
People do the people do crush it, right? But more than that, it's not an easy stock to trade from a technical standpoint.
It's actually pretty similar to the Dow Jones. So if you look at Tesla right here, and then we pull up the Dow chart, it's like, okay, just a bunch of fuckage back and forth. Like, if you look at some moving averages here, the 200-day moving EMA, it's been going along it. But at the same time, if you try to trade the Dow, it's a very hard stock or indice to just trade. If you're trying to trade an indice, it's very difficult, and that's kind of like what Tesla looks like right now. Something like this, something that we traded today was CVM. This is actually kind of a revival / gold pattern that you're going to see a lot in our training. This is just a standard revival breakout pattern. If you guys don't know what a revival is, it's basically a stock where the lead in trend is bearish that you can see here, and then forms up a triangle breakout pattern or a flat bottom kind of breakout pattern that we see here on CVM. I didn't trade this to the long side when this first initially broke, but just for an example, what I was talking about, how kind of breakouts changed. We used to just see clean break 2005 to like 2007. It would, okay, stock broke out. We have a clean breakout. It's going up. But a lot of times now you can see once this broke out over $1.10, the next day was chaotic. This candle, like it was down, and it was back up, and then it closed down. That's what we see a lot now after breakouts on the daily chart, is a candle like this where it's a little bit all over the place and then decides if it's going to go up or go down. So a lot of people get shook out on these secondary breakout dates before it actually continues when you're swing trading. I don't do a whole lot of swing trading anymore because I don't want to deal with this fucking stress where the stock is down at fucking $1.07 and I bought it on the breakout and I'm like, I have no idea what it's going to do down here. And then it closes back up and then it goes back up to 130 and then it back down here at 110. I'm like, that was stressful to hold through that entire day to find out if it's going to break out the next day. So I like to take advantage of just intraday action. I think, Mike, you shorted this.
Yeah.
We double teamed this stock. You hit it short, I think at what, 165?
Yeah, 165. I just scalped it because, again, I thought this was going to rip higher, with the revival pattern. But and ended up crashing. And then I think you bounced it on the long pretty nice on the bottom.
Yeah, so that was like, I put this on the watch list last night. Like, I'm looking to potentially long this for a magnet to $2 per share because it is kind of a revival gold pattern. Gold pattern is usually a much longer term breakout, but this is revival. And I wanted to see its magnet. We call it a magnet because it's just drawn towards that level on a breakout to the next whole number. There's also the 200-day moving average. So I would have potentially longed on a pre-market high day break at about 170. Just for a quick 30-cent push towards that 190 to $2 level, which is also the 200-day moving average, and then considered short if we got in the 220 to 230 area. But we didn't. So once that cracked this morning, Mike got short, took advantage of that dip, and I actually started buying in at about 138, 139 here once it started retesting these kind of fake out lows. Once we see kind of like after the stock is already down significantly, it was already SSR, short sell restriction, which means you can't short into momentum. So people have to short when the stock is upticking. So when I was seeing these breakdowns on this low, I wasn't thinking, okay, people are going to start panicking. People are going to jump in short. I feel like people might get trapped here on the short side, and then we might start bouncing. So I actually loaded up 10,000 shares between 138, 139, and then just took a quick scalp. My risk was at about the low a day, 137. And then I was looking for about a 10-cent move or so. And it bounced up to 149. I sold about 146 to 147, I believe. Just a quick scalp, not a typical like big move that I'm looking for, but that's kind of what we've been dealing with in the market is just these scalp moves. And it's actually had a big move up to the upside, 150. Another thing that this was also something that I talk about a lot in FOOS 4, the original, is that usually when you see a big, this is called a white Marubozu. I haven't said that fucking word in a long time. Breakout candle. A lot of times, if it's going to have some sort of continuation, it'll retest the midpoint of the breakout candle. So the midpoint of the breakout candle on this was around 140, which is also around where this was dipping to 140s. If we look back here, this is also in that same range of support back here. So I was basically just using these as kind of the base. 1, midpoint of the breakout candle. 2, this previous consolidation, and I started nibbling 5,000, another 5,000, and then just took the quick squeeze to the upside. Because obviously there's a bunch of people that shorted this. They're going to cover this at some point.
That's where I would have been covering.
Yeah, right up on that pop. So just a quick little scalp. And that's just kind of an example of, this is August, this is slow season. So we've been taking a lot of scalps on these trades. So this was just an example of utilizing 2 different sides of the trade. I didn't short it. Mike did. He made some bank. I longed it. Mike didn't long it. And we both made money on both sides of the trade, utilizing the things that we teach you guys in the FOOS 4 system. So this is just what's nice about small caps is that they're just a lot more predictable. It's more identifiable. There's a lot less competition. If you're in the large cap, you're trading against algos, you're trading against institutions, hedge funds. There's a lot of smart people who are probably a lot smarter than you. And like I said just before, trading is nothing more a transference of wealth, and that wealth is determined. The transfer of that wealth is determined by your knowledge and understanding of human psychology and technical patterns. So there's a bunch of dummies, and me and Mike just took advantage of a bunch of dummies here. Basically, how that trade worked out. So moving on, what was kind of the next?
Honestly, we're basically banging them all out and just throwing them all together. Day trading, volatility, charts being technically friendly. That's really the big thing, guys. Is the technically friendly, because just to give my experience, I used to trade a lot of fundamentals when I knew zero charts, and I couldn't time shit. You would wait a couple weeks or a couple months for something to happen. And like, what's nuts with these charts and the timing is that like we can anticipate a stock breaking out or breaking down 20 or 30%. So without charts, how are you going to be able to predict that? You're not. So you can predict it way easier on small caps, a 10 to 30% move, than you can Tesla for sure.
Yeah. So small caps, guys, just like you saw there, there's volatility. It's easily playable on both sides of the trade. And that's what we kind of focus on doing. Like when I first started trading, I was only longing for probably 10 years. That's all I did was go long. I had about a year in between there where I started to short. I was like, all right, I want to learn how to short stocks. I want to make money on both sides of the trade. And I had a couple good trades, but I also had a lot of losing trades, and I had one huge losing trade. And that just wiped me out as far as me wanting to short anymore. I'm like, all right, I'm making all this money going long still, but I'm also trying to go short, and it's eating away all my profits that I'm making going long. And then I had one big one that I lost like 8 to 10 grand on. I think it was Ren or Den. I forget
Ren?
what it was.
RENN.
Yeah,
I believe. And that's the thing. Yeah, you gotta understand about shorting as well, is that it takes a lot of risk management. This is why we usually try to teach people to go long first, because it's easier kind of to understand the risk management of going long. When you're going short, there's per se unlimited loss potential, because you can short a stock at $1 and that thing can go to $100, and that technically you can lose a lot more money that's in your account. But if you buy a stock at $1, you can only lose as if it goes down to 0, you lose whatever you put into that stock. But if it goes to 100, you just lost 100 times the amount of money you even have. You could potentially owe your broker money. Usually they're going to give you a margin call or whatever, stop you out before that happens. But that's technically what could happen in shorting, and why the risk management is so much more important. Unless you understand the risk management of going long first, you're playing with fire going short. So it's a more difficult strategy to learn, but the reason why we do it is because the fact that it is more difficult, that means it's a bigger edge. There's less people shorting than there is going long. So me and Mike always talk about having an edge in the market, and there's something called locating for shorts. Stocks that are readily available short, that means that everybody can short it. So that means there's less of an edge because more people are actually doing that. You have less of a insider tip per se on that trade. So it's important to have that edge. Being able to short is definitely an edge over people that only know how to long. You know how to make money on both sides of the trade. And that's what's so great about small caps. I think most people who make the most money in small caps are all making money on the majority of this side of going short. So
yeah, I would agree.
Yeah, I remember when you did that. That was pretty. It's tough to reverse your thinking. Like a lot of people, when I hated shorters. I hated the idea of shorting, and I would get pissed if I was like on Twitter and someone like was short the stock I was long, like that. You know the guys I'm talking about. Some of the big shorters that are still out there today. So I saw Foos. You really just you spent a long time just kind of reinventing your thinking, and that was pretty inspiring just to do that. And
it wasn't easy.
Kind of motivated me. No, it definitely. But how did that affect your longing once you got it? Did you see? Besides, now you short a little bit more.
Yeah, basically, the last 2 days I think made most of my money going long, but I typically am like 90% short. But the difference is, what happened was I was trading so many breakouts. This was where I was making all my money for years. And what happened is that my breakouts were continually more and more turning into false breakouts. So I had to basically, I realized that I wasn't making as much money as I was going long anymore. I was like, all right, I'm just getting fucking stopped out. All these are turning to false breakouts. And what I noticed is that once those false breakouts happen, that's basically a trap. Everybody who bought in that breakout now panics and sells, and it turns into huge momentum on the downside for potentially going short. So I kind of had to reverse engineer my thinking process of where a breakout used to always mean buy, to now once a breakout happens, a lot of times I'm more so looking like, all right, I hope this thing fails because I'm going to short this thing and take advantage of everybody who just bought that long, and then they're all going to freak out while I'm shorting their long, and then they're going to sell because they're panicking, and that's going to continue push down the stock. So it was really just an understanding of seeing that the breakouts weren't as clean as they used to be and having to adapt to the new environment of potentially going short. And then I started making money going short. I was like, man, I've been making the money going long for so long that going short is something new. And I was like, all right, I have like a revived passion for trading. This is so much more fun. And just the thought of going short when things are going down and when most people are like, oh, I hate trading, or the market sucks. Like, like I'm like, die,
Well, what do we say? We profit at the misfortunes of others.
One of our students was saying that at some point. We were cracking up. But it's also it's really important to understand the psychology and the technical analysis of both sides of the trade, because if you're going long a bunch, you don't understand what people are thinking that love to short or that are looking for the short, you're definitely going to be at a disadvantage, because that also goes into targeting your profit targets, picking your profit targets, because you're like, if you're long, you see a breakout, you're going into a play, you're like, all right, where are people going to start ramming this thing short? Because I want to get out when that happens, because otherwise you're going to get a little small spike and then the stock's going to come back down. You're going to give away back all your profits. So it's important to understand where shorts might be coming in heavy if you are long a stock. So you have to understand both sides of the trade when it comes to small caps or just stocks in general. But for us in small caps, it happens very, very quickly. A lot of times you can have $500 profit, $1,000 profit, and you're like, all right, this trade's going good. Then 2 seconds later, or 2 minutes or a minute or something, you're back down to break even or at a loss. So a lot of times it's just scalping, which is a lot what we've been doing lately, just like both trades that me and Mike made on CVM. We're just quick in and out scalps, and that's it. So anyways, guys, I think that's about it for today's podcast. Unless you guys have any closing arguments, Robert and Mike, if there's any topics or anything you had left to say.
Robert, I'm good. I think we hit everything.
Yeah, we did hit it pretty good there. I think, I have one question. What do you think, back to small caps and the trading on healthy exchanges? I always try, even though if you're trading, say, a $3 stock, you're still trading like a NASDAQ, right? So that's probably, I would say, like 80% of what we trade is on the NASDAQ, right?
I don't know if you guys ever all in the NASDAQ. Occasionally, I honestly don't even look anymore. I don't think it even lists on my OTC.
As long as there's most of the time not OTC, I'm trading it.
As long as it fits my criteria, usually under 20 million share float, lower market cap, in my range. If there's volatility, that's one thing that me and Mike always talk about, is like, there's a pattern here, but the volatility or the liquidity is no good. If you guys don't know what liquidity is, it just basically refers to the amount of shares being exchanged over the course of the stock trading. So you have to have liquidity if you want to be trading, position sizing 5 to 10 to 15 to 20, $50,000 positions. You have to have enough volume and liquidity there to actually get in and out of that trade without, ramping the stock in different directions, because there's nobody on the bid and ask to actually there. There's no supply and demand. So there has to be liquidity, and that's definitely a huge factor in our trading.
There's others out there that focus on stuff with very little liquidity or very little setups, and just be careful of that. Make sure you understand, the liquidity of what you're trading when you get in. So we try to focus on healthy, volume NASDAQ plays. If we do trade a lower float type stock, we generally kind of say, you've been pretty good at letting people know. All right, low floater, big spread, trade accordingly.
So basically what's going down, what's happening in today's market is there's some other people that have chat rooms out there that have a lot of people in there, and they're identifying stocks with very, very low liquidity that are also super low float, and they're telling everybody in their room to buy it, and it's creating an artificial market to influence the stock to go up. A lot of times it'll even move so quick that it halts because there's no liquidity in the stock, and it goes up, halts. And what we do, you guys know who you are. We're actually taking advantage of your fucking bullshit manipulation, and then we're shorting those stocks. So it's because we know it's bullshit. We know it's fluff.
That's
We
where
know
the
it's
transfer of wealth exists.
yeah,
Yes.
it's artificial. So we know that, and you'll get to understand if you start watching small caps a lot and these low floaters. You can instantly look at a move and identify just by looking at the liquidity and the volume that just came in out of nowhere. This is a chat room pump. It's not something that's not easy to identify after watching stocks for the past 14 years. So it is going on. It's happening every day. It's part of the market, and we're taking advantage of that stuff a lot on the short side because we know it's an artificial market. But anyways, guys, that is wrapping it up for today's episode of Life of a Day Trader podcast with the Foos4 trading team. If you want to learn how to day trade with us on a regular basis, we have the Discord trading chat room that we're in 5 days a week. We also got the hangout room. We got the gaming channel. So we're always hanging out in Discord. We got a huge community of awesome people in there, and also mentors in there to help you guys out. So I would love to have you guys join. There's going to be some links below if you guys want lifetime access for just $99 to our Discord chat room. It's pretty cool. And I will catch you guys in the next. Peace out, Robert. Peace out, Mike. Thanks for
Peace, guys.
See you guys.
Catch you guys in the next episode.